Hi guys, welcome back to the channel. Hope everybody's doing well. It's that time in the month again where we can reflect back upon March's performance to see how we're doing from an overall portfolio standpoint in terms of valuation as well as dividend income received. So this month's portfolio value is about 88,000. Since the start of the year it has been pretty flat. There hasn't been any fresh capital added throughout this point, so I don't really know if that's a good thing or a bad thing, as my portfolio stayed pretty flat even though the market has been highly turbulent. When we look further back over time, we can see how the portfolio has been progressing through each quarter. This is the value of the portfolio taken from a Hargreaves Lansdown account at the end of each quarter, and as I just mentioned there, the flatness of the portfolio actually goes a little bit further back to about Q2 21. As the market has rotated between high growth companies being the market leaders towards value, my portfolio has been going through the same transformation and it hasn't actually really changed in value. Whether that's a good thing or a bad thing, I'm not entirely certain. I'll leave that up to you to decide that one. From an asset allocation standpoint, I'm made up predominantly with US shares. This is about 39% of the portfolio, alongside UK shares, which is 30.6%, sitting on about 14% cash at the moment, with property being about 9.1%, and technically this could probably fall under the international shares as this is US based REITs. 5% is classed as other, as long as 2.2% within funds. To get an even better idea how this is broken down, it breaks it down between the UK and international equities alongside the sectors. So the weighting as it stands just now, 17.7% in technology, 3.9% telecommunications, nearly 11% in financials, 9.1% in real estate, 9% consumer discretionary, 12.9% in consumer staples, 8.2% in energy. Within energy you've got that 4.4% within other, and I think that's to do with my MLP exposure. Healthcare, I'm sitting on about 9% almost. Industrials make up 2.2%, and unclassified funds is in at 2.2% as well, but it hasn't quite allocated a sector to this. Sitting on about 40% cash as we said, and that makes up the full allocation of the portfolio. If you want to view how this is broken down via market cap at the bottom, 32.3% with a market cap greater than 50 billion. Followed by 13.8%, 20 to 50 billion. I won't bother talking through the rest of them, you can just have a look to see how the portfolio is weighted. In terms of dividends, March I got £131.62, which was the lowest out of the first 3 months, but nonetheless we'll look through how we're doing at the moment. So total income for the year stands at £534.57, giving me a monthly average of £178.19. The 4th of March I got Pfizer, which came in at £18.73. Then we got Amgen, £18.61, Walgreens, £23.14, Organon, £0.54, BP and Shell paying two very nice dividends, £36 and £34 respectively. March 2021, I got £162.48, and this is made up from the payments below. I got Microsoft, Walgreens, Consolidated Edison, Raytheon, Lockheed, BP, Shell, Gilead and Digital Realty Trust. Some of these stocks I have actually sold for profits and no longer within the portfolio, which is why you'll see a year-over-year decrease. There's also another reason for that. I have been rebalancing the portfolio from more international shares to UK based shares, and because these get paid semi-annually, I'm expecting really good months between probably about April, May up to September, October. I'm expected to be pretty consistent good months. This chart here really paints the entire picture for you on the overall dividends that I saved and the varying payments throughout each month. 2022, we've had the 3 payments as discussed. We're still miles away from the highest payment of £308, which was received in 2019, but you can still get a nice overall view here of the varying payments that are received and the overall progression year over year through specific months. Some months vary as they're going down, like for the likes of this month for March where I've went down year over year, but overall throughout the year this will be an overall uptrend on the dividend payments received. The total dividend income that I've received over almost 4 years is nearly £5,000. It's £4,973, and this is made up with the information that you've got on the screen. And as I said, although the month over month payments might vary, year over year I would expect this to hopefully be somewhere around £2,300 to £2,500 by the end of 2022. As with most months, I have been buying and selling some stocks here. The stocks that I've sold were Altria Group and Apple, and I did buy some Leggett & Platt and Alphawave Group, so we'll jump into some of these details just now. On to Altria, and Altria is one of the largest tobacco companies. They pay a very respectable dividend. I bought into this company on 2 separate occasions. on the 10th of November 2020, and then on the 21st of April 2021, which gave me 78 total shares within the company. When you look at the last 5-year share chart, which we've got on the screen here, overall over the last 5 years, it has been downtrending. So for me to register a good profit along with the dividends received, I was happy to do so. The dividends that I got from Altria were superb. From the 55 shares I initially had that was getting between £28 and £29, increased my position to 78 shares. This was coming in at close to £43 per quarter. Overall performance I got in this stock was really good when you take into consideration how volatile the market's been. Capital appreciation came in at £614.92. Dividends received £185.13, which gave me a total gain of about £800 or 33% within the initial position. On to Apple. I didn't sell Apple because the company isn't a great company. It was just purely because the fact of I kind of left myself in no man's land. When I bought this company, it was only about 1.5 to 2% of the overall portfolio, so it was quite a small position, but that's kind of what I like to do. And I've got that mental block. I do struggle to buy on the way up. I guess I like it when the stocks are going down. I can average in on the way down. When companies actually go up, I kind of struggle a little bit. So I kind of left myself in no man's land. It was a small position, but it had good gains. I did manage to pick up some dividends as well within Apple, which with payments here isn't crazy, but still happy to take these nonetheless. The overall gains that I got here within this company, capital appreciation was £435.88. Small dividend payment of nearly £11, which gave me total gain on the position 24%, collating to £446 back into the portfolio. For March, by selling these two companies, just looking at the capital appreciation, this gave me a March total trade gain of £1,050, which I'm really happy to add this back into the portfolio, sit on cash at the moment and look for further opportunities should they arise. The two stocks that I did buy, one is a fresh position, which is Leggett & Platt. I picked up 85 shares within this company at about just below $38 per share. Alphawave, this company is already within the portfolio, and I've got this as a UK semiconductor company, and I think that over the next 5 years or so this should be a really good performer. It should be quite volatile as expected, but I picked up 468 shares at a valuation of £1.67 per share, or about close to £800 spent on this transaction. So why did I buy Leggett & Platt? It's a company that does have some headwinds due to the higher inflationary costs and expected slowdown within the furnishing industry. It's a company which has been around for a long time, and it even raised its dividend most recently on February the 22nd by 5%, which shows that this company has the potential to weather any storm. The dividend ultimately was one of the reasons why I bought this. It offers a safe dividend with a payout ratio just now of close to 6%. You can see the dividend history chart from back in 1990 through the dot-com bubble, the great financial crisis in 2007-2008. It's been able to either keep paying or grow the payments over time, which is a promising sign within this company. Due to the high yield of close to 4.5% and a reasonable payout ratio, I'm happy to add this into the portfolio. So now we'll get on to the favourite part, where we can look through each individual stock to see how they're performing collectively and individually. The market is open at this time, so you may see the prices fluctuate as I'm talking through this. But we've got the cash balance is 12.5k almost, and I'm looking to deploy this for any opportunities throughout the year that presents itself. But going through these stocks, Alibaba is down close to 45%, and it does look recently, although the Chinese government has started to come out to say that they're going to back this company, it could be turning a corner, so we'll keep our eyes on that. Alkaline Water down 3.43%, Alphawave IP down close to 24%. Amgen is one of the companies which is up, as it's in the healthcare sector and seems to be offering some resilience in this market, up 21.3%. BAE Systems is up 46%. Boohoo Group is down 24%. We've got BP up 8%. British American Tobacco up close to 18%. Canopy Growth Group still down 85% from me being a total idiot buying this stock a few years back. Citigroup is down 11%. Coupang down 31%. Darktrace down 8%, Energy Transfer down 27%, GAN down a whopping nearly 70%, and GlaxoSmithKline turning that tide there and bringing the portfolio to a positive 10 on this stock. Goodbody Health is down 86%, for me being an idiot as well and buying this a few years ago. Then we've got Greencore Group, pretty flat on the position. Iomart is up 6%, Leggett & Platt, that new position that I've got this month, is down close to 7%. Medical Property Trust up 11%, Merck up 15.9%, Micron close to being up 10%, Money Supermarket down 25%, New Residential Investment Corp about 6.3% to the upside. Organon up 2%. Palantir is still down 33.3%. Polar Capital down 4%. Shell up 15.5%. We've got SoFi down 44. Store Capital down 1. Tattoo down 23%. Ventus up 4. And Vodafone down 7.5 almost, with Walgreens up about 5% of the invested capital. So that makes me down about £14,000 or 15.86% on the capital invested. But I guess the one positive thing here is that although I'm down 14,000 here, if I take you back up here, we've still got quite a bit of cash on the sidelines, so there's plenty of time to turn this around. Obviously we're at the mercy of the market, but anyway, this is just what I wanted to show you this month to track the progress. I hope you enjoyed it, and I'll catch you all in the next video. Cheers.